Trading is absolutely not for everybody. Not every person in the world can trade because it takes specific people to get into the industry we're in. However, if you're watching this video, you want to know what you have to do to get into trading. So I thought I'd compile kind of keywords that I would look for from a good trader if you're starting out. So we're going to go straight into the spreadsheet, and then I'm going to go through the main things that you need to look for. And then we're also going to go onto the charts and give you guys some pointers on the market kind of key indicators that we're going to be looking for as well. So the first thing is going to be your emotions. How do you react to difficult situations? How do you react to drawdown? How do you react to blowing an account? How do you react to market news coming out? All these different elements really determine you as a trader. The psychology is absolutely everything, and if you can master psychology in trading, you will do well. The only reason that you see these influencers online and they've got, I don't know, $10,000 floating profits and they're waiting for $15,000 and they're waiting for this target level to hit or this to hit or that to hit. The only reason they've been able to get to that point is one, money. Okay, they have a lot of money so they can over leverage, they don't have to risk as much, and two, it's experience. It's because they know their take profit is going to hit. So why would they take $10,000 instead of $15,000? They're cutting themselves short of $5,000. They're sticking to their plan, they're trading. And emotions is the biggest thing in trading. If you are over emotional, if you hold a trade for too long, if you don't take it when you shouldn't, if you're too scared to trade, if you don't want to enter a trade, that's a big issue, because if you're not entering trades, you're not making money. If you're too scared to buy a funded account, if you're too scared to put money into a broker, all these elements just indicate that you're not in a good spot to trade. And emotions do come alongside with money. Depends on how much money you have, depends on kind of your liquid per month, and it's one of those things that you need to kind of decide for yourself. If $10 is enough for you per month that you're happy to get rid of and put onto account, or do this or do that, then $10 is your, I mean, I don't think that's enough, but you can kind of save up maybe over a period of time and then look to get a funded account. And then because that money is not something you care about, then you'll trade a lot better. And a lot of people don't realize this. So make sure you've got enough money to back yourself. Don't just spend $3,000 on a funded account challenge when you only have $3,000 in your bank account. And when you're actually trading, watch your emotions. Learn how to control your mind. The next thing is over leveraging. There's so many people in the industry that will get a funded account and they'll think, oh, like, I'm just gonna risk 3% to make fucking 6%, and then I only need 2% to pass the account. You're going to go down a slope. You're over leveraging your accounts, which means that you're looking to make quick money. This is not a cash grab industry. Okay, this is a compounding industry. The only way that you're going to do well in this industry is by compounding your accounts, compounding the money that you're making. Put your money that you make from a prop firm back into a prop firm and pass another account, and so on and so forth. Of course, keep some to the side, pay your taxes, do this. But so many people just over leverage their account, blow it, and then they're back to square one, and they will go, right, trading's a scam, this is that, and it's only because they did it wrong. So prop firms or brokers, this is a big question. It depends on you as a person. So if you don't mind putting £1,000 into an account and slowly trading and building that up, and you can afford that, go with a broker, because a broker, you can kind of build on top of that, and it will build good habits and it will build good things. Whereas a prop firm usually is, you can get a $100,000 funded account for let's say like $300 to $500 depending on the prop firm. You then have 10% drawdown, so you have technically the allocation of $10,000 for a $500 fee. And of course, you can leverage more, you can make more money on it. You potentially could be making $1,000 payouts, $2,000 payouts, $3,000 payouts on these funded account challenges. But you need to be a good trader to pass them. So the risk that you have on that is $500, whereas the risk you have in the broker is, of course, if you lose the money in the broker. So maybe you might risk $50 to make $100 per trade, whereas you can't do that with a prop firm, because if you fail, you lose all your money. If you pass, you get your refund. So only establish yourself in the prop firm space once you're a good trader. Do not waste your money. Finding your edge, okay? You need to go onto YouTube, like this video, find different things that suit you, what works for you, whether you like simple or really complex. I personally like quite complex, more difficult styles of trading, and not because I think I'm a genius or I think I'm smarter than anyone. It's just because my mind is telling me that I need more conviction. I need more things to tell me it's going to go this way or that way. That's not all the time though, because sometimes I will also go, we'll keep this one simple. We'll just do a breakout trade. We'll just do a break and retest. We'll keep it very, very simple. But for me, I like to look into it a bit more. I'm a bit of a nerd with it. I like to look into why. Okay. Your edge might be a simple support break. Your edge might be a resistance break. Your edge might be a unicorn flip and a liquidity sweep. It doesn't matter what your edge is, as long as you find it, define it, and actually work on it and prove to yourself that it's profitable over a period of time. And just one more thing before I go on to the next one. Your edge, the more you trade your edge and the more you have conviction on it, the more confidence that you have, the more that you're going to trade it, the more that your emotions are going to be better, etc. It's a massive compounding effect. So if you find an edge, literally work so hard to prove to yourself that it's good. And once you've done that, trading becomes a lot easier, and then you just stick to your plan. Backtesting experience. Experience is the biggest thing that no one can teach. Okay, you need to be in the markets. You need to be backtesting. What does backtesting entail? It's basically going back on the charts and pretending you're trading. So there's a brilliant software out there called My Trading Journey. This is a software that I use for backtesting to find trades that have previously happened, but in real time, I can predict maybe what is going to happen with an account next to me and then see if I would have made money or not. And that's how I define my edge. Again, they all kind of relate with each other, but experience is the biggest thing. Just get into the market. If it's demo, if it's real, if it's whatever, just get into the markets and start trading and gaining that experience. Realistic gains, right? You're not gonna, if you're 18 right now and you're like, I want to start trading, and you're thinking, wow, I want to go to Dubai, I want to make $2,000 a day. I don't want to burst your bubble. It's not fucking realistic. You're not going to make that sort of money straight off the bat. You may over a period of time, but it's going to take a lot of hard work and dedication. Realistic gains for the first year, realistic gains are going to kind of look like this. So in the first year, you're probably not going to be profitable. You're probably going to lose money. You're probably going to blow accounts on prop firms. You're probably going to blow cash accounts. You're going to lose a lot of money in your first year, most likely. But I do know traders out there that have actually profited in their first year. So it depends on you as a person. It depends on if you care, right? Your second year is usually your better year. So this is $100 per day. This is, again, I'm not telling you you're going to be making $100 per day or $200 per day. It's just an estimate, right? You could, in your second year, be making around $100 per day. If you stick to a strategy and you stick to a risk, over the course of a week, if you take one trade a day and you have, I don't know, let's say, for example, an 80% win rate. So out of 10 trades, you lose 2 and win 8. If you stick to a correct risk to reward, you will potentially be making $100 a day if you do it right. Again, it's just a numbers game. It's just probabilities. We aren't traders. We're just professional risk takers. We're professional decision makers. And as long as you make the right decisions and act at the right time and not have emotions with that, you can be making them numbers. Year 3, you could be doubling that up. You could be making $200 per day. Year 4, you could be making $500 per day. Because, of course, once you get experience and once you get money behind you as well from the previous years, it's going to compound, right? And then you might be able to risk $500 per day to make $500 if you are trading 1-2s or if you are trading 1-1. And then, of course, your year 5 is just unlimited, right? You could be making $1,000 per day. You could be making $10,000 per day. I don't know. People in their 5th year might be only making $100 per day. But that is dependent on their lifestyle. It depends on what you want to achieve. It depends on how much money you have on the back end as well. Like, it's really difficult to pick which amount that you want because you don't know the life that you want to be living. For example, you might be making $200 per day and you think, I'm content with this. I'm happy with this. But then there's some guys out there like me that see that and they're going to go, okay, well, the next month I want to be making $400 per day. I want to be making $500 per day, etc. So it depends on where your limit is, right? And it depends on how much you can risk. It depends on a lot of shit, right? But these are kind of realistic, slightly realistic numbers that we have in front of us. And I'm not coming on here and saying you're going to be making $1,000 per day if you just stick to this simple strategy. No, if you stick to a simple strategy in the second year, I think you could be pulling in around $100 per day. And again, that's not every single day. That's like overall. Okay. If you stick to a strategy, you stick to your emotions, you stick to what I'm teaching you, you could be making a decent amount of money. It's all paper. right? This is controversial and not a lot of people talk about this. So you have an A book and a B book, right? And B book is what everyone is trading on. B book is basically a demo environment. So once you open a broker account, you are on B book, which is a demo environment. Let's say, for example, I'm a broker, and I think everyone should know this. Let's say, for example, I'm a broker, you give me $1,000 and 98% of traders fail. Do you think I'm going to then put that $1,000 that you gave me into a live account and let you blow that? No. I'm going to take that $1,000, put it in my pocket, and then give you a fake $1,000. You're going to blow that fake $1,000, and I've kept the $1,000 that you give me. That is how trading works. However, once you do make money, guess what happens? If I make $1,000 on my $1,000, that $1,000 that the other guy lost, he's paying for you to make that payout. Okay, so the money's held in a pocket or a wallet before you fail or before you breach your account. And until you breach your account, that money is in that wallet. And then when you breach your account, they take that money in their own pocket. Okay, so it's all paper. But why is this important? It's important because it changes your mindset slightly. It's all demo anyway. It's all a demo environment, especially with the prop firm space. It's all like fake money, right? You're buying the chance to get fake money, which you're then going to be paid for your performance. So therefore, you can kind of use that to your own leverage. Yes, the money that you paid for the account is real money. But once you actually pass that and you're trading on fake money. So therefore, you are going to be making money on it. But that small little bit in your mind where you're constantly thinking about money is gone, okay? And you need to look at it from the point that you're getting paid for your performance. So if you perform well and you do your job well, you will get paid out. If you don't, the broker or the prop makes the money, okay? So you just need to perform better than the broker or the prop. Or you need to prove to the broker or the prop that you're better than everyone else. That's your job, and you will get paid for it. R to R is all that matters. What does R to R mean? Risk to reward. Say, for example, I have $100 in a trading account. Am I going to risk that $100 to make $200 for a 1 to 2? Maybe. Is that over leveraging? Yes. So if I have a $100 account and I risk $10 to make $20, I'm making more than I'm losing. It sounds so stupid, but that is your only job. Don't trade 1 to 1s. Don't trade 1 to 10s. Don't trade 1 to fucking 6s. Trade 1 to 2s, 1 to 3s, and maybe a 1 to 4 now and then if it's a really nice setup and it's a bit of a swing trade. But never trade a 1 to 2 and never trade anything over a 1 to 5 because it's so fucking unrealistic. You will have the smallest win rate known to man. And the only thing that matters in this game is how much you're making versus how much you're losing. For example, I have a funded account that I'm currently running. It was down around 6%. So 6 trades are lost in a row at 1% risk per trade. I took one more trade and made 3%. So I made one trade cover 3 losses. If I do that again, it covers all the losses. If I do that again, I'm up 3%. If I do that another 2 times, I pass the account. So I know my strategy wins. It's good. So therefore, I'm sticking to the right risk to reward parameters, not blowing my account, not over leveraging, and over a period of time, because my edge works, I will make money. And 2 to 5% per month is attainable. Okay, it's achievable. You can do it. Is that enough for you? It doesn't matter, because you will get to those bigger accounts where it does mean a lot to you. For example, if you're on a 100k account, you're making 2 to 5 grand per month from one account. If you're running 10 accounts, I mean, come on. You're making 20 to 50 grand a month from trading. Holy shit. Like, that is money that you can't even comprehend. Okay. So stick to those normal percentages. Okay. Stick to those levels where you're happy with making a certain amount and get that fucking money out and rinse it again. So many people that I see will be up 2%. And then what will they do? They'll go, I want 4%, I want 5%, I want 6%, I want 10%. And then they'll slowly start losing that money. And then they'll go, oh, I just want that 2% now. I just want that 2%. I just want to make that 2%. And then they'll go, I just want to make that 2%. I want to make that 2% because now I'm down 3%. And then they'll work their way back up to that 2% and they'll breach it because then they're emotional and their whole psychology is off. So stick to reasonable percentages, please. And now we can go on to the charts. Now we can talk about some chart work, okay? What are we looking for? The main thing that you need to be looking for is a trend. Where is the market moving up? Okay, is the market moving up or is the market moving down? And the way that you can do that is through top-down analysis. And what does this mean? You have a 1 day. This is a 1 day time frame. Okay, so this is showing me the daily candlesticks that we have here. Okay, we have a 4 hour, we have a 1 hour, we have a 15. Okay, so on and so forth. We have different time frames, and basically, I want you to look at it as you're like slowly zooming in, zooming in, zooming in. But when you zoom out onto the higher time frames, you get a bigger picture of what's going on. So typically, when I jump into the day, I might go onto the 1 hour, and I'll go, "What are we doing on an overall downtrend?" And we're slightly impulsing. So what am I looking for here? My question to you right now is: we're at this low, market's moving up. What will you do? What trade are we going to do? Are we going to do this? Or are we going to do this? You have two options really in trading. Are you going to go down or are you going to go up? And sometimes you get stopped out and it goes up, and then sometimes it goes up and then goes down, and so on and so forth. But right now, what would you do? And the only answer that you guys should have said is look for shorts. Because why? We're on a downtrend. So why do you think you're smarter than the fucking markets? Why do you think that you're going to buy the lowest low in the market and it's going to run all the way back up to these highs? It's not fucking realistic. Like we said, be realistic. Make it simple. Make it very, very simple. I make it complicated, but not in regards to the charts, in regards to data, fundamentals. But simple way of trading is just playing with the trend. But then you need to look at pivot points. So the main thing we're going to be looking for. Oh, what the fuck has just happened? So the main thing that you're going to be looking for, as we said, is the trend. But then you're going to be looking at pivot points. So pivot points are just the high and lows that are being created, like so. Okay. And we're going to be potentially trading from these or using these as leverage. So for example, if we look at this trend here, we can see we've got a low down here. And we've got a high maybe up here. You want to go for the extremes, right? Low and high. So now we know that we're going to be trading around this pivot point. We have an internal high. So we have this high that was developed. Market come down a little bit, ran all the way back up, swung this high, failed it. So what are we going to do then with the overall trend? We're going to be looking for shorts from here. And maybe you go for this low because this is a previous low that we established. So maybe we can go for a short off here with our stop loss just above that high, etc. It's not hard. You kind of just need to read the markets very normal. Trend, structure, and then maybe supply and demand. Supply and demand is just going to be it's basically all the same thing. It's just support and resistance. It's just this major high. It's just this major low. Okay, but it's done by a box. Okay, and that's another thing. Don't look at all this like ICT, SMC bullshit. It doesn't matter. Just look at the trend. Look at what's working for you, and you will be fine over a period of time. So that's kind of a summary in trading of what I've learned over the past 3-4 years. Don't overcomplicate it. Don't make it worse for you. Once you start getting to a good level, yeah, you can implement COT data, you can implement fundamental indicators and all these types of different things, but it's not necessary when you're starting out. Go on TradingView, open up a demo account, pick a strategy, find an edge, work on your psychology, build, get a prop firm account, fail, pass one, make your money back, stick to a risk reward, fail account, and rinse and repeat. And you keep doing this cycle. You go through this cycle. But you might be thinking, this is such a shit cycle though. I don't really enjoy it. But the amount of education that you're getting for your future self is so important. It's so important. The amount of accounts that I've breached, the amount of times that I've sat there with my head in my hands going, what the fuck am I doing? And it's taught me the things I'm teaching you now. You got to stick with it. You got to work on it and you'll all be fine. All right. I'll see you guys in the next video. I hope you enjoyed this little one.